Good morning, everyone from Singapore. Thank you so much for joining us here today. My name is Frank Troyes, and I'm absolutely delighted to help kick off today with a discussion on fintech and what we thought would be interesting in terms of this topic area. In a COVID world, in a market environment that's new, asset prices reacting and behaving in ways that are now new anomalies, what does all of this mean for incumbent institutions? And what are we seeing now in the market relative to incumbent institutions? i.e., what are the implications of SoftBank's portfolio and its valuations? And what does that mean for the market? What about all of this investment that we're now seeing here in Asia into India? What does this mean in the US as it relates to large firms like Schwab and Goldman Sachs now buying portfolio properties at distressed valuations? So what we thought we would do here today to begin the conference, and again, thank you everyone for attending, was to talk to two of the leading fintech firms. And ironically, and we were joking beforehand, that part of this in some ways is a knee-jerk oxymoron for folks when folks think about financial institutions being innovators. But I feel very comfortable in introducing you today to two individuals who I think the world of both personally and professionally. First of which, I tease him again that my relationship is purely predicated on the fact that he has terrific New York Yankees seats back in New York. But I'd welcome Sachin Shah, who was the former CEO of AIG Asia Pacific and is hands down one of the market leaders in the region as far as digital innovation for insurance companies. And I think we're going to have a wonderful conversation on that end. Conversely, if we're picking on the incumbents, how could we pick on an insurance company without picking on a bank? And with that, we have, again, who I believe, and the market would agree, hands down, one of the leading individuals and institutions in the fintech market. But I'm absolutely pleased to have Alex Manson join us as the global head of SC Ventures from Standard Chartered Bank. So gentlemen, thank you very, very much for joining me here this morning. And I'm very glad that you were able to carve out some time. And with that, Alex, I'm going to pick on you. If you could kick off real quick. You actually had two press releases come out recently, one of which was, if I read it correctly, that StanChart is actually having a quantum computing initiative, which you would never expect from a financial institution. So maybe if you could just give us a quick overview of your remit at StanChart and maybe talk for a little bit about what and how quantum computing is now playing into your strategy.
Sure. Thanks, Frank, and thanks for your kind words as well. Maybe easy one first. I can comment on the announcement we made yesterday, and I'll give you a broader view of what we're up to in SC Ventures. The two announcements are completely unrelated, but came out the same day. Although I can articulate a theme that is common to them. One is a partnership with USRA and revolving around the utilization of their quantum computers for us, and the other one is an investment we made in Metaco, which is a Switzerland-based firm manufacturing hardware security modules, and they've become an important partner and provider for one of the ventures we're building, which is in the digital space. So stay tuned for that. So I guess the completely different, unrelated, but there is a common theme, which is one of not just new technologies for the future, but putting some focus and almost switching our attention to hardware and infrastructure of the future, as opposed to just software and the way we're doing this. So they're both relatively long-term plays and fascinating, I have to say. Back to SC Ventures, generally speaking. So SC Ventures is a unit of Standard Chartered, which we've constituted a little over 2 years ago. By way of background, I've been a banker for almost 30 years, which I'd say is a long time. And my last job was running the transaction bank at Standard Chartered, which was my last job in banking, I should say. You can characterize transaction banking as perhaps one of the most classical areas of banking, absolutely essential. This is what banks are known for: payments, cash, trade financing, custody, these things. And yet, obviously, an area of banking which has been heavily disrupted, is being disrupted, and is in the process of transforming quite fundamentally. So I got to know of fintechs and digital disruption in that space, and I came to enjoy it. And part of me wanted to change the bank, and part of me was frustrated that we couldn't just change the bank from within, that we had to do things a little differently in order to reinvent banking and revamp what we were doing. So SC Ventures is really the amalgamation of different things, but part of it is inside the bank and part of it is outside the bank. Inside the bank, we have a lab. That's where we engage with fintechs, with POCs. We run an entrepreneur program. We do the things that you would expect a lab to be doing, generally speaking. Working a lot on skills, on culture, on mindsets, and to some extent on method. When it comes to entrepreneurship, for example. And outside the bank, we build ventures, and the ventures are separate legal entities. They're independent from the bank. They're wholly owned by the bank initially, but we typically bring in third-party investors to help scale, add value, also establish the corporate governance of those companies. The most public of the ventures at this point are the virtual banks we're building across Hong Kong and other places. But also we've announced a banking as a service business where we plug the bank into someone else's platform. We're building a platform for SMEs in India, where we have announced a payments business, Assembly Payments, which is really an aggregation of payment business for merchants in a supply chain, and a number of other things. I'd say some 20 ventures that as of today, either ready to go to market, or some very early stage, in incubation. And we invest. We do not invest in ideas that we think are interesting. We invest in our partners essentially. So at the conjunction of what we do internally and externally, we have also set up a fund, which is Series B and beyond, and so not too early stage, not too late stage. But the main characteristic of it is the mindset in which we're doing this is that we only invest in the partners we work with in the context of helping them scale, which requires resources from us and a lot of attentions, which we justify in some ways. But also we align incentives with the founder when we say you really should be doing this, not that on your product roadmap. We're giving people that we're in this together. So the mindset of our investment activity. That's SC Ventures in a nutshell.
And real quick, geographically, your footprint, can you just give folks listening to this, how give us a sense of the size of your footprint?
So it starts with the footprint of the bank, which is quite peculiar in some ways. So for a little over 160 years, the bank's been headquartered in London, and the whole business is in Asia, Africa, and the Middle East. And so we have that dichotomy between the fact that we are present in the West, but that is in order to help clients come to Asia, Africa, and the Middle East. And Asia, Africa, and the Middle East is where we have our roots, our knowledge in many ways. And they're the markets in which we operate. So the footprint of SC Ventures is sort of ties with this. In other words, we're operationally headquartered in Singapore. This is the main hub. This is where we incubate most ventures. This is where we run the biggest lab. But we also have labs in Hong Kong, Shanghai, Bangalore, and obviously Africa. So that's in Nairobi, Kenya. And we also have a outpost. I'd say one in London where we engage with the local fintech community and local clients, which is a really important part of the activity, as well as San Francisco.
Good deal.
In the context of scouting ideas and establishing relationships that can be transported to the footprints of Asia, Africa, and the Middle East.
Fantastic. And with that, Sachin, I'm going to pick on you again. And to segue from, as we're talking about San Francisco, and if I reflect on New York, so you and I are both Yankee fans. Technically, this year should be the year that we would win. Yet for some reason, you're focused on staying out here. And I think, why, obviously you had also a very sizable remit. What's exciting you now in Asia and ironically about insurance? I mean, why wouldn't you go back to New York and watch the World Series versus, why are you continuing to stay here? And what do you see as the opportunity set?
Well, first, Frank, thanks for the invite and also the kind introduction and words at the beginning here. Look, I think probably what I'm going to say is very obvious in the sense that from an insurance perspective, Asia represents by far and away, I think, the most attractive and probably the largest opportunity for insurance companies and for delivery of insurance in the world, not just now, but for the next 5, 10, 15, 20 years. Even if you look out over the next 5 years or so, 60 to 70% of the total insurance growth globally is going to come from Asia. China will be about half that, or just a little bit more than that, and then the rest of it from rest of Asia there. So it just, for me, I've been bitten by the Asian bug, so to speak, for quite some time now. And while there are attractive opportunities in the U.S., it's a mature market, but there is quite a bit of disruption and innovation underway there as well. The growth orientation and the diversity of need and growth orientation and diversity of delivery models in Asia just really, I think, is very attractive. And in fact, I'd say in my own experience, having spent time out here and having worked for two very large U.S. multinational insurance companies, we're at a point over the last several years, and I think certainly going forward, where it's no longer about what we bring from the mature market into Asia. And there's quite a bit now of what Asia can bring back to the mature market, both in terms of product, delivery, consumer orientation, how you think about brand, how that brand manifests itself here. And so those are all the reasons that sort of reiterated for me that, watching the Yankees on my MLB app through a VPN is still a good trade to make while my kids enjoy the actual tickets in New York City.
And actually, selfishly, go ahead, Alex. I'm sorry.
I was going to build on Sachin's point, which is first I agree. I would echo your thoughts. Humble observations. I don't think any place in the world has replicated the ecosystem of Silicon Valley, and this is a remarkably powerful and productive ecosystem, for lack of a better word, which a lot of the place can only aspire to. However, when you're thinking of the streets of Manila, Jakarta, Mumbai, and you think of the urgency of needs, and you combine the urgency of these needs with relatively young populations that are in a very high level of digital adoption, a combination of these two things is a very fertile ground for technological innovation. And so you have this effervescence of creation, entrepreneurship, innovation in India, China specifically, but across what I call a footprint, which is remarkable, fast-paced, and so I think at some point the likes of Bangalore, Shenzhen, obviously, may well give the valley the run for their money.
Yeah, and I think to build on that, just given the population, the demographics, and the challenges that governments have here, there's just a lot more openness within government and government policy in many cases that embraces the use of technology, if not requires it here. It is a key part of how you get at scale with initiatives in this part of the world. And to your point, it's becoming more and more embedded in the way consumers interact as well. So you have technocratic approaches here with some democracies and authoritarian regimes underneath there. But the technocratic approach, I think, really does make a huge difference in terms of the openness, willingness, and embracing of tech solutions or tech being embedded in the way traditional things are offered.
Sachin, let's follow that. And if I could segue slightly here in terms of the comments you both made on China. So the great news is that this conference has as attendees a terrific C-level attendance and predominantly in the United States. So you both represent large financial institutions here in the region. Sachin, you and I have talked forever about how important distribution is here. To these executives that are listening today, Sachin, you wearing your insurance hat, Alex, you wearing the bank's hat. And Sachin, let me start with you. I mean, as these executives are thinking about the region, especially now in a COVID world, and also alongside that, you and I have also talked about you have to think about China as part of that model. And obviously that has consequences to it in terms of how you're thinking about it. But what would you say to these executives as they're thinking about bringing their companies from the States or from Europe here to Southeast Asia to start? And how should they be thinking about broader Asia in terms of, how should they be interfacing with you as an insurance company, and what is the solution or the outcome that they should be driving to?
Look, I'd first start with saying Asia is not China and China is not Asia, right?
Mm-hmm.
And it's really important to recognize that this is a very large region geographically and from a diversity perspective, from a policy perspective, from a consumer and delivery perspective as well here. Now, having said that, China as a market, it's hard to ignore China. You can't be in Asia, I think, without having some clear and meaningful strategy about what you're doing with and in China, for sure. So it's not to say that China is to be excluded. I think it's very hard to have an Asia strategy without that. But it's also important to recognize what China is and isn't as you think about your Asia strategy. China's a closed ecosystem, a very large and in some ways very attractive, though I think the attraction's been to varying degrees elusive for a lot of multinational companies for reasons we all know. But it's a closed ecosystem that if you can get into it, you have the chance of success and scale. But also recognize that because it is a closed ecosystem, it's not necessarily easy to take what works there and transport it somewhere else into Asia. And in many cases, the rest of the markets in Asia all have their approaches in terms of what you would do to be successful there. So you have to think about Asia as not China and China not as Asia, and clearly be able to, at least at a minimum, at the highest level, separate those two things. I'd say even within the rest of Asia, and it's important to think about the numbers. China, everybody talks about China as a very large economy, 1 billion plus people, 10 trillion in GDP, or I think it's 13 trillion in GDP, and so on. ASEAN, which is essentially Southeast Asia, to keep it simple from a geographic perspective, is about 10 trillion of GDP and 650 million people. India is another billion of people and another 3 trillion of GDP. And then we didn't include North Asia, which would have Japan and South Korea, which is another 7 trillion of GDP. That's a more traditional geographic definition of Asia. Others have more expansive definitions. I didn't even talk about the Pacific, Australia and New Zealand. The point in putting those numbers out there is that most people think of Asia as China, and it's a China strategy. And I think China has to be a key part of an Asia strategy, but there's tremendous opportunity elsewhere in the region, and it's interconnected with China in many ways, hence why China has to be part of your strategy. And it's also important to recognize that within that, there's no one answer to this. There are at the highest level, yes, we're an insurance company, we're going to deliver insurance to everybody. So at the highest level, that's perhaps a strategy. And yes, we distribute through banks or through agents. But when you get down to the local market level, whether it's with a banking partner like Standard Chartered or whether it's through your agents, it's very localized in terms of how the system works, how compensation works, what the product is, what the regulations are, and appreciating that the differences in Asia matter. And I think often where Western firms, in my experience, have struggled is that they focus too much on what's common and how do I leverage the commonality. And as a result, you lose the importance of the differences, where here the differences really matter because there's deep histories along national lines here. And those deep histories really want to honor and respect those differences more than the commonalities.
Alex, to that, if you can expand on that, I mean, I'm going to oversimplify the point that one of the points that Sachin's making. I mean, relative to those differences, are we now in an environment, because of the technology that's there in place, because of the regulatory willingness to do certain things, is it now efficient where, and again, Sachin, forgive me for oversimplifying, where maybe China is a silver bullet, where you can view that as a one shot versus you look at Southeast Asia? But can the bank and other FIs look at the fragmentation in Southeast Asia and say, no, actually they are local markets and we can now efficiently attack that almost to the same degree that we would have attacked China if we were to look at the two separately?
The quick answer is, technology makes a lot of things very efficient, but no. It hasn't. I would echo what Sachin was saying, which is it's not like payment or other technology can harmonize a whole continent. In my career, I've gone back and forth between Asia and the West, and so I used to speak about Asia and the West, and routinely say there's no such thing as Asia. It does not exist. And then when in Asia and people would come and visit, I'm going to be in China, maybe I can come by and see you, and I would remind people that slightly wrong on the mileage, but the distance between Seoul and Singapore is the same as London, Minneapolis, right? which is a long way. Which is a long way, and so by the way, if you live and work in Asia, that's why you used to fly a lot of miles. So the point is the region is vast and it is remarkably diverse. It is in many ways a lot more diverse, obviously, than the United States certainly, or even Europe. And by the way, the same applies to Africa. I say now there's no such thing as Africa. You have to really differentiate between different markets, different parts of it, different cultures, different ways of doing business, and different propensities to do things in a certain ways. So what does that mean for us as multinational organizations? Well, we're playing two themes. Standard Chartered historically has been a trade bank, right? We believe in trade, for the improvement of everyone on the face of the planet, and we enable merchants and commercial links, and we reduce asymmetry of information between buyers and sellers. And so here I'm really talking about global supply chains. Is there a theme where technology can really help with global supply chains, notwithstanding today's tensions and trade wars and lies, which are completely put aside? Yes, absolutely. Right? Can you come up with better ways to affect payments, reconcile inventories, and the likes with today's technology versus what we're able to do only 5 years and certainly 10 years ago? Absolutely, there is. Is there a way to, can you understand some of the dynamics in Asian supply chains without understanding China? No way. Yeah. It's inextricably related. And do you need an element of presence and therefore understanding of the China market in order to do a good job in the rest of ASEAN? I think so, actually. But having said all these things, the continent, if you want to characterize it as a continent, is remarkably diverse, and no market can be approached the same way, even where you're thinking you're doing exactly the same thing. I'm going to give you the example of digital banking. I'm going to build a virtual bank. The reality is, you might build the same channel here and there, but the reality is your value proposition from a client perspective is going to have to be fundamentally different from one market to the next if you want to have any chance of being meaningful and relevant. And that applies to about everything we do.
And I'm going to pick on both of you and our respective ages, because we're all in the same demographic. And it's always funny with these conferences. Just as we're getting into a rhythm, we're getting the high sign that we have about 4 minutes left. So let me ask you a question. And again, picking on our ages, and I say this with all respect to both of you. Both of you could work technically anywhere you would want in the world. So you are at that level in your careers. So for folks listening to this in the 4 minutes we have, and Sachin, I'll kick it to you to start. Why Asia? Big picture. Is it a function? What's driving you to say, yeah, I want to be here? Because it's not money anymore. What intellectually is now causing you to get up in the morning and say, I'm excited to do this?
I think just summarizing, the conversation that we've been having here, you have huge potential. Just simply put, and I'm going to be a little bit myopic in talking about the insurance market, but I'm sure it's true about banking as well as many other industries here. If you look around the world in terms of growth opportunities, attractive growth opportunities, and of course, growth never comes without risk or challenge. So you have to kind of assume that is part of the package here. It would be hard to walk away from here as a region. And it's not just about China, as we've been saying here. There's very attractive growth opportunities, ex-China, that are equally in size and scale here. Diversity, both of people, of history, and of how you go to market. So there is a challenge dimension to that, but an exciting aspect to it as well, because it really does require you to have all your senses on, and a fair amount of intellectual power here. I'd say the energy as well. And for anybody who spent any time in Asia, you travel anywhere and it's not only high energy, but you go back a week or a month or a year later and it looks like a completely different place in terms of the pace of what's happening there. And that energy comes through in the talent that you bring on board. People are, the concept of hard work is not even something you discuss. Everybody comes in with that. And the intellect and the smart and the will to figure out is really high here. And when you channel that, it's just exciting. And so as a senior leader, when you think about the conditions you look for, right, of course you want challenges. We're all accomplished senior leaders. And we want a landscape where there's attractive opportunities there, not without risk. And you want you want a landscape where you have the right people. Right, because people ultimately, insurance is a people business, as is banking, and without having the right people there. So it's just, to me, a combination of those things that said it'd be hard at this point in my career not to continue a bit more of this drug, so to speak. And as I said, I'll take the Yankees on MLB app for a little longer.
Alex, what about you? What's causing you to get excited and wake up each day?
Sure. So first, I was going to agree with everything you said, Sachin, and echo your sentiments. So let me mention a couple of other things. First, providing a bit of context. In Asia, we've talked a little bit about China, which is a fairly developed market. We operate in places like Bangladesh, like Pakistan, like really difficult markets to operate, where you have to know your way around. Not to mention some of the African, Middle Eastern markets where we are as well. And the other piece of context is sustainable development goals and taking humanity out of misery and improving the state of the world, generally speaking. I happen to believe that financial institutions and banking specifically are an essential part of doing this. Have a role to play, have a duty to play a role in that in that context. And so when I go back to what I mentioned earlier, the urgency of needs and the technology that we have today at our fingertips, combined with the reach, the scale of the financial institutions we represent, we have a formidable opportunity to have a huge impact on the world, and I can't think of a better place to have that impact at the moment. Right.
Done. Well, on that high note, which again, gentlemen, I can't thank you enough for taking time out of your busy mornings. Thank you for that. I can see based on the attendance that we've had a fantastic audience. So thank you both for that. And again, thank you to everyone that listened and participated today. And we look forward to continuing this conversation with all of you in the future. Miles, with that, we'll turn it back over to you and team.
Thank you.
Thank you.
See you, gentlemen.